Okay guys, so in this video, I'm going to show you a very simple and effective trading strategy that you can use to trade, make money on a small 85 account, all right? So the strategy that I'm about to show you now is synthetic indices strategy. So I'm going to show you how to analyze the synthetic indices market and get good entries which are safe for small accounts. So synthetic indices are very good for small accounts because they have tight spreads compared to forex pairs. With this, you can trade even with a very minimum capital of even less than $1. Yeah, and I will show you the synthetic indices that allows you to trade with as little capital as that. So make sure you watch this video to the end if you really want to learn, right? And in case you're new here and you have not subscribed to this channel, then please consider subscribing now so that anytime I upload videos like this, you will become the first person notified. So make sure you turn on the notification bell, right? Yeah. So let's begin. So what are synthetic indices? Synthetic indices are unique financial instruments designed to simulate the movements of the real world markets. Yeah, so they move based on algorithms and random number generation and not external market factors. Okay, so that means they don't get affected by economic news or other real world forces that affect traditional markets. And the most interesting thing about synthetic indices is that they have constant volatility 24/7. So you can trade them anytime, any day, even during the weekends and the holidays, they are always open. So they're not like forex pairs where you have to wait for a specific time to trade just because of how their volatility changes according to the market sessions. So with this kind of trading, there is no time limit like the binary options trading where we have fixed expiry time. Here you can hold a trade for as long as you want, even if it is for 1 year. So the more the price goes into a direction, the more profit it generates. And also it depends on the type of a trader you are, because we have different types of traders like scalpers, day traders, swing traders, position traders, and others. So before you start trading, you need to understand the type of trader you are. Yeah, like for example, scalpers. Even we binary options traders, we are under scalpers category. So scalpers are the short-term traders, where traders aim to profit from small price fluctuations, often holding position for just a few seconds. Then we have day traders who open and close position within the same trading day, typically seeking for profit from daily price swings. All right. Yeah. So we have swing traders. Swing traders hold positions for several days, weeks, targeting larger price within an established trend. Then we have position traders who hold positions for extended periods like weeks, months, or even years, focusing on long-term trends and market fundamentals. So you just choose the trading style that suits you, right? Or your personality. So if you are a binary options trader who is maybe struggling with emotions and anxiety because of the limited trade expiration time, then this type of trading style might be better for you, because here you can just place one trade and make a very huge profit from it. Yeah, just one trade can change your story. So I'll show you how it works, so that you can try it out as well and see if it suits you, right? So first of all, you make sure you have a synthetic indices account, which is the MT5 account. And in case you don't have it, then you can just go ahead and create a free trading account with the link in the description. And I will also pin the link in the comment section for easy access so that you can create your account and check and test these synthetic indices out. Yeah, so after creating your synthetic indices account, now this is how to start. You should start by analyzing the market for you to be able to know the next move or the direction of the price. Remember, here we make money with the price movement. So we need to catch a big move to make good profit. Okay. Also note that you can also do the analysis on the smartphone. So it's not a must for you to have a laptop or a PC. Every tool you need for analysis is just right there. And for those who are using PC, just know that this is TradingView platform for only doing analysis. And after doing analysis, you go and place your trades on your trading account, which is separate from this. So this one is just for doing analysis, right? It's a different platform. So after doing your analysis here is when you go back to your trading account, place a trade, right? According to your analysis. So now let's look for opportunity, make some cash, right? So when you do analysis, you need to understand the time frame as, according to the type of trader you are. So if you're a scalper, you need to focus with the 5 minutes time frame to 15. If you're a day trader, you focus with 15, 30, 1 hour. And if you're a swing trader, you focus with the 1 hour, 4 hours, and the daily. Then position traders use a daily time frame and above, right? So in this platform, we only have up to one daily time frame, but in the trading app, we have up to monthly. So I don't know why they have not put here, but remember these are separate platform. So this is just for analysis, right? These are trading view, just do analysis. So for us to get opportunity, uh, shift to 5 minutes time frame because I want to show you a scalping strategy, which is good for small accounts, all right? So here we are on 5 minutes time frame. And as we have a good downtrend, guys. This is a very nice downtrend. Yeah, I think this one is a perfect entry, guys. Let me just put the trade now before that opportunity goes away. Okay, let me share my screen. So this is the trading app you need to have in your smartphone. As long as you have a trading account, you connect it with this trading app. Okay, so this is a MetaTrader 5. Just click on it. You can see. Okay, yeah. So let me see the minimum lot size. The minimum lot size should be okay. It's 5. So let me place those trades. I've placed 1, 2, 3, 4 trades. You can also increase lot size. If you have a good account, you can also put a good lot size, like let's say 5. Let me place 2 trades only instead of putting so many trades like this. So I've placed 1, 2, 3, 4, 5, 6. Yeah, 6 trades, and I'm expecting the price to continue dropping. Okay, so I think I'm late. I was supposed to place at the open of that 5 minutes candle. Yeah, I was supposed to place that trade here, but no problem. No problem. So is our entry. I think our entry is somewhere here. Stop loss. Let me put the stop loss there. Then the TP. Stop loss. Let me put here. The TP. It's good there. Let me continue analyzing. So that, yeah, the TP should be somewhere around, let me see, this one, we have a zone here, okay? Yeah, so I think the TP should be there. That's our TP. Remember, the market goes from zone to zone. And here we have a very good downtrend. So the price is supposed to drop, guys. I think the price is supposed to continue dropping, you can see. So yeah, so I'm expecting the price here, okay? Yeah, so the market will continue dropping. So just flow with the trend according to uh this analysis you can see. So that was our entry. Let me put 3 trades there. That's a good entry now. Now this is the perfect entry. That's the perfect entry. That's the perfect entry. So let me put it at the opening of this candle. This was supposed to be entry. Nice. So the stop loss should be there. The TP should be here. Okay. So I will hold it until it hit the TP. Okay. So how does the TP and the stop loss works? Let me explain how the TP and the stop loss works. So let me put take profit, stop loss line and the entry line. These are entry, okay? So this is how it works. We put it like this. So the stop loss is called SL, okay? Stop loss, okay? That's the SL. That's our stop loss. When the market hits there, we're going to lose money, okay? And this is our target. This is where we take the profit. That's our target. That's where we take the profit. Then the target is called TP. Okay? Target is called TP. TP. Take profit, okay? Take profit. That's our take profit level. Okay, then we have another one here. We have this one here. This is our entry, guys. That's our entry. It's called entry. That's our entry level. It's okay. Entry level. Good. So this is how it works. All right. So the red box represents the losses you get from the trade, and the green box represents the profit you get from the trade. All right. Yeah. So this stop loss is where when the price reaches the trade will close automatically with a certain loss. And the TP is a level where when the price hits, the trade closes automatically with a profit. Then the entry level is where you placed your trades, okay? So from your entry level, when the price goes in the opposite direction, you run into losses. But when it goes into your direction, it generates profit. All right. So as you can see, it is now below our entry, and that's a sell entry. So if you sell, that means you have predicted that the market will drop up to this level. So the more it drops, the more money you make. Okay. But if it goes in the opposite direction, the more money you lose. So the more it goes, the more money. So this is to stop. Okay, this is to stop the trade and stop you from losing a lot of money. To save your capital. Okay, to save your capital. All right, so that you don't blow the account, so that you don't lose everything. That's why it's called a stop loss, to stop the loss, to stop you from losing your money. But if you don't put the stop loss, trust me, you will get your account blown with 0.00. So that's why you need to protect your capital by putting the stop loss. So you only risk the amount you're willing to lose at this stop loss. For example, if you risk, let's say, $10 here and you target 20 to $30, you see? So there's something we call risk reward ratio. So if you risk 10 to get 20, that means you have used 1:2 risk to reward ratio. That means you have risked 1 to get 2. If you risk 1 to get 3, that means it's 1 to 3 risk to reward ratio. So I don't know if this one is 1:2, but it looks like it's more than 2. So this size, okay? So this is 1, that is 1:1, this is 2. So I think it is 2.5. Yeah, 2.5 risk to reward ratio. That means if you risk $10 here, you're gonna get $25 profit. Okay. Yeah. So it's like you risk 5 to get 15. You risk 10, get 30. You risk if you risk 40, you get uh 120, like that, like that. Okay. So at the stop loss, you make sure you check the amount you're willing to do. You check the amount you are willing to lose. Okay, so that when you hit your stop loss, you know the amount of money you're going to lose, and the amount you're going to lose, you should be comfortable with that. Don't risk what you cannot afford to lose. Okay, so let me put the TP. Let me show you how to put the stop loss and the TP on your trades. So you check the quotes. Use these quotes. Okay, these quotes. Okay, so you need to see them clearly and check. I use this blue line. So I'll put these quotes. Okay, these quotes. This is two. Let me see. So just swipe like this. Click on the pen. Then you come to stop loss. Then write 2326.152. Let me see. You have something. You have something here again. Don't have. Okay. Let me try that one. So I need to copy it. Copy. And I modify. Let me see. Yeah. So there. It's good. Some point. So this one, the yellow, the orange line, that's the stop loss. You can see we are willing to lose $30, right? If it touches there, I'm gonna lose $30, and that is under one trade. And you can see I have too many trades here, so you calculate 30 times, yeah, times 1, 2, 3, 4, 5, with the same lot size. Okay, this one with 5. Okay, so let me paste in all of them. You paste the same word in all. the trades. Don't miss even one, because that one trade can cost you a lot. That one trade can cost you a lot. Okay, if you don't place the stop loss in all the trades, then the other ones will close, but the one you don't put will continue running. It might blow your account. Okay, might blow your account. So let me put the stop loss in each and every trade, the same stop loss. Make sure you don't leave even one. It's better you leave the TP, but not the stop loss, right? Yeah, so now let's go to the TP. For you to place the TP, you go to TP. Let me check. Yeah, this one is 2304. So you go to trade, swipe, pen, then you write 2304.416. Then I copy and paste in all the trades, right? Copy and paste in all the trades as well. Okay, that's it. So now I'm expecting the price to continue going down. Like I told you, the market doesn't go straight. They must do those pullbacks and wherever for them to continue going down. Pullbacks must be there. Since this is a downturn, we are still safe, so we don't have to worry about anything. Don't have to worry about anything. Okay, so let me put this one like this. So I'm expecting the price to continue dropping. Okay, so let's hold the trade. So here I'm expecting how much? Let me see. With the losses of 5, I'm expecting 78. So $78 times 1, 2, 3, 4, 5. That's let me see. 78 times 5. That's around 309. I'm going to make a lot of money from this trade if they hit my TP. I'll make over $500 if I'm not wrong, right? Because I've placed a lot of lot size, my friend. I've over risked, but I'm willing to lose the 147. So don't risk what you cannot afford to lose. So I'm ready to lose it, that 147. Yeah, but I believe I'm not going to lose it. I'm sure with the analysis, this thing should drop. So let's wait for it and let's see. So with this kind of trading style, you can just place a trade and go and do some other things while the trade is running, while the market is working for you, right? So you let your money work for you, right? So you now can go back and sleep, some other things. They say is the only way to make money while sleeping. So after your analysis, you place your trade and hold it. So it can decide to play around there, come to the TP or go to the stop loss. So yes, accept. All right, yes, accept. So let me wait for the results. Let me hold this one until it hit my TP. All right. So as you're watching, if you're not subscribed, please consider subscribing. And if you are learning something, make sure you leave a like, press the like button, and share this video. All right. Yeah, if you're not subscribed, please consider subscribing now and turn on the notification bell so that anytime I upload videos like this, you will be the first person to be notified, all right? Yeah, so let's keep holding this trade and wait for results, all right? Yeah, let's wait for money. I still believe the price will drop and drop. It's a matter of patience. You need to be patient and hold your trade until it hit the TP or stop loss. Okay, yeah. So that's how easy it is. That's how easy it is. So if you don't have an account, if you'd like to try this out, just click the link in the description and create your synthetic indices account. These ones are not affected by news, so you don't have to fear anything. If you place a trade, just hold without stress. Don't think of maybe news. There's a time news is gonna come out, gonna wipe you out. No. With this one, the volatility is constant. So just hold the trade until it hit your TP. Okay. The speed of the volatility, just the same. No need to worry about anything. Okay. Yeah. So let's wait for results. Let me go and do some 1, 2, 3. Alright guys, you can see the TP has been smashed. Alright, the TP has been smashed, and guess what? Guess how much we have made? Ta-da! We made, taken the account to $609. Alright, total amount right now in the account, and the TP has been smashed. So sorry guys, I ran out of storage. Yeah, so I ran out of space on my phone. That's why the phone stopped showing how the trades were run. But you can see the TP has been smashed. All right. Yeah, and the account is now at $609. So that's how to trade synthetic indices, guys. This is the strategy that can help you grow your small account in a very quick way. So practice this strategy and see how your account is gonna grow fast. So thanks a lot for watching the video to the end. I hope you have learned something from this video. If you have learned something, please consider subscribing now and turn on the notification bell so that anytime I upload videos like this, you'll be the first person to be notified. Alright? Very good. So let's meet in the next video.